guys, this is Dr. Sadasivam once again with you. Today we are going to talk about what is happening in the stock market. We had put up a video giving details about this Fed tapering, and in this video we will be focusing more on the impact of US tapering on the Indian stock market. Along with that, I will also try to give you a little bit of explanation in terms of what this tapering is and little bit of background details that can give some idea on how it can impact the Indian market. Today, Nifty opened gap down 250 points lower. In fact, for the last few days, we have been seeing the Nifty scaling up from lows of approximately 6,500 to 18,500, right? People were extremely upbeat about, it crossing 18,000, 18,600. We were all taken by a surprise in the morning today when it opened gap down 250 points, right? Absolutely something which was totally unexpected. The reason for that is something that has long been discussed, but yesterday in the US Fed meeting there were some minutes, and probably that was the reason. So it is very clear and evident, and even today people expected little bit of buy on dips, but that didn't happen at all. The impact of that was felt across all the Asian markets, including your Nikkei, which fell by approximately 2.5%, and whole of Asia it was red. And even in Indian equities, if you see your steel companies like Tata Steel and most of the heavyweights like HDFC, Reliance, they were all struggling in trade today. And also the IT companies like your HCL Tech, your Infosys performed very weakly today, guys. Of course, there were few companies in the green, starting with your UPL. Probably it's because they have announced some 25% EBITDA margins, and some future group, Bharti, and even Maruti, right? People are talking about Maruti, it might touch its whole level of maybe 8,500, 9,000. It touched 10,000 if you remember 3-4 years back. Anyway, otherwise the broader markets were all in the red, and it was across the board sell-off, and so disappointing. Now, some of that can be attributed to the US Fed policy. In fact, the Federal Open Market Committee, it's called as FOMC, which is an equivalent of what we have, which is Monetary Policy Committee, which is MPC, right? In fact, they have decided to eliminate emergency quantitative easing programs, right? What is quantitative easing? Normally, quantitative easing, I don't want to go too deep into the subject because it's a macroeconomic term, and initially Ben Bernanke, those days, it was taper tantrum happened since the time it happened. Taper tantrum. Nobody talks about quantitative easing. It only remains in the macroeconomic textbooks, and nobody talks about it, right? Quantitative easing. Okay, all that lead to the same thing, guys, which is a rise in the interest rates. I will give you a little bit of explanation about that for your understanding, because its impact on the stock market is extremely important, not what it theoretically means. You're not going to write an exam and take some marks. Fed stand was very hawkish. Hawkish means rise in the interest rates. Why is US doing that? Probable reasons. One is inflation in the US is at a 4-decade high. That is number one. Number two is unemployment, guys, has reduced to pre-COVID levels in the United States. In fact, companies in US are finding difficult to find workers, which means America is growing like anything. That growth needs to be controlled. Too much of growth. Too much of growth is also an issue, because It has given rise to uncontrollable inflation, and that's what the US government is trying to do to reduce the inflation. How will it do it? Obviously, by rising the interest rates. But rising interests have other complications, guys. Not just in the United States, it's okay. They will be able to control their growth to some extent, but its impact on the emerging markets. We have seen that happening in 2013. Taper tantrum. I've put a video on taper tantrum. Even yesterday, I put up one more video on what it is, giving tidbits of information on what it is. Now, US has been talking about this tapering for quite some time. In the last 2-3 months, they have been talking about it. I don't remember exactly the dates they talked about it. The day they talked about it, the stock market fell down. I'll try to get those dates. I don't remember that offhand. So two things they are trying to do. One is the taper, which is rising of interest rates, and the second thing is balance sheet reduction. I don't want to get into the economic part of what is balance sheet reduction, but broadly, the US government purchases assets. So the net asset purchase has been reduced by approximately $20 billion per month, guys. The net asset purchases has reduced by $20 billion a month, and that's for treasury securities, and $10 billion for mortgage-based securities. I don't want to go too deep into it, but just understand $30 billion of purchases have been reduced now. $30 billion is 360-400 billion dollars, quite a sizable money. It may not be as far as US is concerned, but as far as emerging markets are concerned, 400-500 billion dollars is too high. It's 30% of India's GDP, guys, and for other small economies, that's quite a substantial amount. So all that is going to affect the investments into those emerging markets, because once the interest rate goes up, the money will get into the bond market. So whatever money is available in those countries will be pulled and it will go back to bond markets in the US because of the yield curve. This is hard money. I'll put up a separate video on what this hard money is, but from a layman's perspective, please understand, the money from your country, your stock market will go away. And when this money goes away, they won't put 1 or 2 orders, they will put basket orders. Sometimes if you look at the 3 o'clock move in the stock market, you will find stock is going down like anything, because FIIs are putting basket orders, guys. Some 30 lots, 35 lots, not one, some 50 lots like that. This is the way those guys come and, you know, put those shares for sale. It won't be a fall, it will be kind of a crash, right? So this is what is happening. So when this money goes back to US, obviously the markets in the emerging markets will fall, and this has been discussed for quite some time, and to a large extent it's already factored in the Indian market. But the problem is, it is happening very fast. Okay, so in the earlier days, as it happened, of course, even in the past, US had resorted to these measures like balance sheet contraction, rise in the interest rates. They happened. But whenever US resorts to these initiatives, there has always been a gap between these two things. But this time, what is happening is immediately, instantaneously. We are not sure if it happens or not, but it was just discussed. But the market has reacted to it. Look at what happened in the stock markets today. Just the news of it, the markets are reacting very fast, and you have seen that fall that is happening today. We don't know what will happen tomorrow. So what does it hold for India? Let me quickly share certain important statistics. 2021 was a great year. Some companies prices have gone up by 3 times. Your Tata Motors, not one, so many stocks, your JSW, your Tata Steel, your Infosys, your HDFC banks, all these, even Ashok Leyland, guys, 30-40 rupees, now it's selling at 120-130 rupees. If you had put your money in Ashok Leyland, you could have, you know, money would have become 4 times, guys, in the last 1.5 years. Anyway, that was a FOMO, unrealistic high returns in these companies, and equities were outperforming, stellar performance by any stretch of imagination. Lot of things happened, guys. Many of you guys have missed the bus, including me. So with all this, one can expect a little bit of a pause as far as the Indian stock is concerned. Two factors are very, very important. One is China, because China is now changing its approach from a regulatory approach to kind of a stability approach, which is happening in China. Because China wasn't performing very well. But from this year onwards, you can expect China to do well. And the dollar is going to peak, and when the dollar peaks, it has an immediate impact on the other countries in the emerging markets, right? So whether it is on the positive side or on the negative side, I will be putting up a separate video. Its impact on the emerging markets through a separate video, right? So these emerging markets need to keep the dollar price whenever they plan their strategies. We will talk a little bit, and before we come to the dollar questions, and before that, what is important is we will talk about FIIs and the effect of FIIs, especially on the Indian market. What has happened in the last 3 months, right? It will be of very much relevance to people who play in the stock market game, right? There are valuation issues and, you know, stocks too much. I think I will put up a separate video. Right now, let me only restrict my talk to FII, right? In the last 3 months alone, the FIIs, which is foreign institutional investors, they have sold for more than 1 lakh crores. 1 lakh crores, guys. The Nifty fell approximately by 2,000 points from 18,600 on 19th of October, and it fell down to approximately 16,500 on the 20th of December, which is a fall of 2,000 points. But on 5th of January, the market went back to 17,900. That is yesterday. It was almost touching, you know, 17,900. You know what? FIIs had sold for more than 1 lakh crores in the last 3 months, which is one of the reasons why the market fell down by 2,000 points from October to December. 1 lakh crores. I'm repeating those, I know that. But from 20th of December to 5th, that is just the last 2 weeks, they purchased few $1,000s. But the market has gone back, guys. If not to 18,500, it has touched 18,000 yesterday, 17,900, 17,950 or something. Well, near 18,000. Now what has happened to FIIs? 1 lakh crores, which they took away from the country, just brought a few thousands, but the market has gone back to 18. That's a clear indication that the retail market in India is getting stronger and stronger. That is extremely good for us. Okay, so the dependence on FIIs may be little less in the months and years to come, right? Therefore, in my personal opinion, the US federal policy may not have that much of an impact in India like it had in the past. And there will be bouts of volatility, you know, in the short-term period, maybe in the next 2 or 3 months. This is not my own analysis. I'm only comparing the, you know, compiling the analysis of other experts in the country. Because as far as the Indian economy is concerned, things are getting a lot better. In fact, today we have foreign exchange reserves which can cover 12 months of import. In fact, we talked a little bit about this taper tantrum which happened in the year 2013. During that time, the total foreign exchange reserves were approximately just for 6 months. And if you go back in time to 1991, we had 3 days of import. See how much we have come from 1991 to 2021, especially in the last 5 or 6 years, 6 or 7 years. If you see, the country is in a very, very strong footing, be it your capex cycle, your private investments, your GST collections, your income tax collections, your investment in infrastructure, whole lot of things,